Hello everyone, welcome back to my channel. My name is Vitaly and I'm a freelance designer who is planning to transfer to the trading and investing in the next 2 years. Here I'm sharing my journey of building a portfolio from scratch and exploring what it takes to grow as an investor. I also share my trades openly and I'm trying to show the style how I'm investing and how I'm trading. In the last video I was sharing how I trade, what are my strategies and so on, so if you're interested, take a look into the description. Today we'll be sharing the stock which is in my portfolio, and this is a big position for me. And this stock is Amazon. We'll dive into the company's balance sheet, key investment metrics, the biggest pros and cons, and why I chose it as my top position in my portfolio. At the end, I'll answer the big question: is Amazon still a buy in my opinion? As you see, this is my portfolio. It's still small. It's only 8,300 and I'm minus 500 because of the correction. And the Amazon is the biggest position for me. The next one is Meta, Adobe, and Google. I will be going into the details with these companies in the next few weeks. But today we will be talking about the Amazon. Okay, let's take a look into the company. I will just present a chart and you will see that we had a small correction here. From when I started to invest, it was somewhere here. Yeah, but if you take a look, the correction was almost 11%. And I believe this is only better because I can grow my position. Here's the statement of the Amazon. And in the income statements, the main numbers for me are total revenue growth, net income growth, and shares outstanding. So let's take a look into revenue, and I will click on annually because it's like more important for me than quarterly. Each column is a year. We see that total revenue is growing in double digits. It slowed down a little bit from the earlier years, but Amazon became much bigger company, so the growth is becoming a little bit slower. But still, for this giant, I believe double digits is really cool. And it will take a look into the quarterly, it's almost always double digits. Here, if we'll go to the net income now, we see that the growth is slowing down a bit, but it's still amazing. You see, they had like the growth like 200%, 80%. And last year, they were able to grow and net income in 94%. So if I will take to the quarterly here, we see that income was growing like a rocket, I would say, yeah. And even this year already, they have earned more than last year. If we will take a look into the diluted shares outstanding, we will see that dilution is still happening, but sometimes they even buying back stocks. I believe this dilution will be gone in a few years because the growth will be slower a little bit and they will start to buy shares back. In the balance sheet, what I really care is total assets versus total liabilities. I always want that asset would be higher than liabilities. Even better if total current assets are higher than liabilities. Not here, but yeah. But sometimes it happens, it's very rare, but Amazon is not this company. But overall, you can see that total assets are growing faster most of the time than total liabilities, and this is the great metric for me. And we also can take a look into total debt, and we see that last 3 years the debt started to decrease, what is really good. And one of the main points in the statement for me is free cash flow. These numbers are much more difficult to manipulate than other numbers. And as you see, in 2021 and 2022 it was negative. Then stock actually was very cheap because of that. And now they are much more higher than they were. They are even higher in the free cash flow than in 2020 and 2019. So this company is now in much better financial situation than it was a few years ago. So after we reviewed our balance sheet, let's take a look to the main metrics. But before, we can take a look into this chart because I'm not only investing, I also am trading. So sometimes I'm paying attention to the technical analysis. We have this resistance line and the price was testing it multiple times. We see 1, 2, 3 touches and we probably will have fourth one. And if it will be retested and go up, it's good for us. We will have more profits. But if it will not retest it and break out and the price will go down, for me it's even better. I believe that shares are like good products. When you have a discount, you're going and buying it. So the company is great, and if the price of the stock is cheaper, I'm just buying more. It doesn't matter if you're losing money on the paper short term, if you will earn much more in the long term. So let's take a look into the metrics now. The most important metrics for me are price to earnings, forward price to earnings, price to free cash flow, earnings per share next year, this year and next 5 years, and also gross margin. So let's start from the price to earnings. It's 31.5. Just for your information, median is 2025, but for the double-digit growth company, and it's a mega cap company, 31.5, I believe it's even with a small discount. It's not super cheap, but it's already cheap. And if you take a look into the forward PE, it's even lower, 28, so it will be even better price. The only metrics I basically don't like in the Amazon is price to free cash flow. And just letting you know that price to free cash flow median is about 25-30 as well, but Amazon historically was very expensive. So I do not pay attention too much to these metrics here. So I don't really care too much about these metrics for now, but I will be watching it very careful because I want it to be reduced in the next years. Another metric is earnings per shares this year. And we see the growth is 28%, even almost 29%. Also, earnings next year are still double digits. I'm happy with that. Earnings next 5 years, it is about 20. So if we will take a look into the past 3-5 years, we see it was between 19 and 37. So next 5 years, we expect only 20. It can be 25 and 30. Maybe it will be 19, 18, but it can be much higher when we are thinking. Also, I'm usually watching gross margin percentage. That's what we have after sale before taxes. And 50% for the e-commerce mainly is really, really high. I would say it's not possible. But we know that Amazon is very well diversified. Because they have mix of these businesses, they can achieve this gross margin. They're a great platform for the resellers. They have cloud solution, they have Prime, and so on and so on. This is really great metric. So I love all the metrics except price to free cash flow. But I will be watching it very carefully next years. So now let's talk why I'm so excited about the Amazon stock. And first is dominance in online retail logistics. Amazon e-commerce platform is a gold standard for convenience, speed, and selection. And that's true. You can buy everything there. You can buy and get it the next day. Its logistic network includes fulfillment centers, one-day delivery, and last-mile solution. It's unmatched globally, and that's true. I used to live in London, San Diego, and San Francisco, and you get it the same day or the next day. Now I live in Lithuania, East Europe, in my home country, and we have multiple delivery companies, but none of them are even near to the Amazon. Everyday parcels are delivered everywhere from big cities to remote areas, showing Amazon's deep integration into daily life. And that's true. Amazon parcels are everywhere in the United States. You see them in front of the houses everywhere. Nobody can match Amazon in the e-commerce market. Their share is over 40%. Walmart is the second, but it's by far not even near. Even if the retail part is getting the most revenue for the Amazon Cloud contributes the largest share of Amazon operating profits. And they are leader in the Amazon Cloud. They have competition there, Google and Microsoft, but they are still the leader, yeah. And they're growing pretty fast there. They slowed down a little bit, but still they're far from competition. They also are a cloud market leader. Amazon Cloud is the world's top cloud provider with extensive global infrastructure and trusted by startups and biggest companies in the world. They also started to grow in AI part. Amazon Cloud offers the full stack of AI ML services powering everything from voice assistant to enterprise AI. Alexa is great. You can talk to her basically like to a person. I love it. And they are using AI also to match your needs in the store of Amazon. You can choose, for example, clothes, and then it will be showing you what you need and even adapt your sizes. They also have huge collaborations with leading AI startups, for example, Anthropic. The next point I love is advertising powerhouse. Amazon is the third largest digital ad seller in the world, behind only Google and Meta. And the pro is that these ads are only on the Amazon. And some of my friends have business in Amazon and they love how the Amazon ads are working. Amazon advertising leverages real-time shopper intent, putting brand right in front of customers ready to buy, driving high conversion rates and new revenue streams. The next point I love is Prime membership and Prime Video. More than 200 million people are global members of the Prime membership. You're getting free fast shipping, exclusive deals, and bundled entertainment keep customers loyal. Like you're getting the Prime Video for that price. You're getting the fast delivery. Sometimes you get additional discounts with that. It's a great deal overall, and people are just using it daily. And the next thing I like, which I'm getting with the Prime membership, is Prime Video, which brings in millions of viewers. Amazon makes like great content as well. Like they don't have so many as Netflix, but overall the content they have is really good. Also, what I like is network effect. Like it's creating a great cycle that increases selection, lowers prices, and enhances the customer experience. They are having a great competition there. Also, Amazon's web of bundle services, including subscriptions, seller tools, and infrastructure, makes switching costly and unlikely for both buyers and sellers. If you are subscribed on Amazon, you will never want to leave because they have the best service. They have great benefits from this subscription, and probably most of the competition cannot provide what Amazon can. And the last point is brand visibility and real-world observation. Amazon has become an essential part of daily life. When you're driving in, I don't know, in the suburbs in United States, you see Amazon parcels everywhere. The visibility of the brand is huge. They have multiple niches there. They have a Whole Foods market as well. Okay, let's talk about the cons now, the risks I see. So the first one is competition. Competition like Walmart in food delivery, Google and Microsoft in cloud, and ads. To be honest, I don't see a big competitor in Walmart in food delivery, but I see a bigger competition in Google and Microsoft. They are much more dangerous in cloud, and Google in ads. But what I like in Amazon ads that they are very niched and usually the sellers are using. In the cloud growth, Microsoft is slower than Amazon and Google, but Google now started to grow faster than Amazon. So I see Google as a bigger risk in the future, but now it's okay. I think it's not so scary. The next thing is regulatory pressure, and I don't see it as a huge risk. We just need to accept that because all huge companies are getting the antitrust scrutiny, labor issues, and potential new regulation. Same was with Apple, same was with Google, and same was with Microsoft. And everyone is still there and everyone is dominating in their niche. So I just accept this risk and I don't react to this thing. Major investments in data centers, chips, and infrastructure can squeeze cash flow short term. And that's true. We had this issue like a few years ago with Amazon where I was showing that free cash flow was negative, but usually Amazon manages this very nice, and as you see, cash flow is much higher now. Then the last point is probably the most hyped now, the retail margin pressure. E-commerce margin are slender and can be hit by price wars or inflation. Because of the tariffs, the prices will be higher anyway. Sellers need to cover their losses with the tariff, and the price will be included into the final price, and the consumer will pay it. I really hope this will be solved soon, because now it's harming everyone. So why I choose Amazon? First point, I'm convicted in their growth. The business delivers consistent double-digit revenue growth and margin expansion, even in tough environments like now. The next point is resilience and adaptability. Amazon pivots faster than competitors and always finds new engines for growth. And the last point is personal experience. Seeing Amazon boxes everywhere strengthens my belief in the brand and its scale. So as promised, in the end, I'm answering is Amazon is still a buy for me. In my opinion, Amazon has a broad moat, high growth, strong financials, and constant innovation. For me, Amazon remains a conviction buy for long-term investors. While there is a risks, I still believe in this company and I am accepting these risks. Advantages are far much better in my opinion. So these were the reasons why I'm investing into Amazon and why I think this should be the biggest position in my portfolio. I know that there are some risks, but I'm accepting them and the company is really great in my opinion. So if you like what I'm doing, subscribe, click like, and remember, keep growing.